Good morning, everybody. Happy May 26th. It is Friday, and we are on the final trading day so far this week. And Europe is open and mixed, to say the least. After we saw the precipitous drop in oil, now trading in that $48 range after the OPEC meeting. Yes, they had telegraphed the 6 to 9 month extension of the cuts, but we don't know the level of the cuts, and we're already seeing certain countries skirting around it, or at least that's what it sounds like. So this is what we expect when we come out of these meetings and dealing with the OPEC and non-OPEC nations, only because they're only as basically when you look at their economies, and if they're not growing and the global economies aren't growing, that's going to put pressure for them to sell oil, especially when it's over $50. So we'll keep an eye on that. But what's notable is taking a look at London. The FTSE, the UK, is trading up almost 0.4% at 0.39%. That's good for 29 points to the upside. What's interesting is that the move in oil is not weighing on the UK FTSE. Why do I say that's interesting? Well, when you have the likes of BP and Shell heavily traded in this market, you would think that this pullback in oil would weigh on it. And it did earlier this week. But what's really driving to the upside is healthcare and consumer names. Consumer names continue to move to the upside. We saw that here in the States, especially in the latest earnings. Some traditional bricks and mortar shops have been off the charts, and consumer names have been doing very well here in the States, and they continue to do well and are driving to the upside in the UK. Healthcare is another one that you want to keep an eye on, especially since now the UK is a couple weeks off from having their election. Their snap election is on June 8th. And right now, the most recent polls have the Conservatives not with as great a lead as everyone had anticipated going in against the Labour Party. That is starting to heat up. Markets are heating up as well, and in the UK to the upside. Taking a look at Germany, though, to the downside, and decidedly so. Almost a mirror image, and I literally mean mirror image, it's flip-flopped. Down 42 on the DAX at 12,579. That's good for a little over 0.3% to the downside. It's now challenging and breaking through its 20-day moving average. The short-term bulls in Germany are digging their heels in, and they're going to have to. You're seeing automakers, BMW, Volkswagen, some of the most notable ones. You're also seeing banks, Commerzbank, Deutsche Bank, they're under pressure. The bond markets have basically popped in price. Yields are going down, and there is pressure here. And with the euro actually moving to the upside, and we'll keep an eye on this. We're seeing the British pound. Actually, we're seeing the British pound and the euro moving down this morning. The previous action in the euro, which was basically up to slightly neutral, now it's pulling back, and there's some uncertainty. And with the G7 meeting this weekend in Italy, there's a lot of talk. There's been a lot of rhetoric and interpretation of the rhetoric, especially by President Trump. He's walking in with a firm talking points, not only at NATO, but also towards the G7, and specifically Germany, talking about their surplus. And so there's a lot of discussion on Germany and having some pressure there. We'll watch that very closely, but watch that 20-day moving average, and you're seeing similar action in the CAC. Now, the CAC, though, in France, down, again, almost lockstep with Germany, is down about little over 0.3%, and that's good for 19 to the downside at 53.17. Again, challenging that green line, which is a 20-day moving average. Short-term bulls are on their heels, and you're seeing, though, that the crude oil contract move is impacting France a little bit more than the other countries. You're also starting to see that financials as well are under pressure. You have Societe Generale, you also have BNP Paribas, all under pressure right now, and that has the French markets down. Let's see if that continues throughout the day. And really what you can watch is the 10-year bonds in Europe. Watch the German 10-year. It's trading up 24 cents. You're seeing that the French 10-year is up 298, and the bulls are clearly in control. And the German 10-year is up almost a little over 19. So with these three main bond markets to the upside, that's telling you that there is a movement into a little bit of some safe haven assets. You're also seeing a big move in gold. As a matter of fact, if I just bring up the gold futures contract, and let me just take a look at it. We'll look at the continuous contract. You're seeing that it's been a huge pop right now, up $9.70 at 1,266. And looky, bounced right off that 20-day and 50-day moving average. Like I said, these are where battles are drawn. That 20 and 50-day moving average is where I find out who is actually in control. And the stock was trading in neutral territory, basically right at those moving averages. That's telling me that neither the bulls nor the bears for the last basically week and a half weren't flexing their muscles, but the bulls still had control. They're now flexing those muscles a little bit going into the long weekend here in the States, and so we'll watch that very closely. All right, folks, that's it for On the Open, taking a look at Europe. I'm going to be back online at 9:30 Eastern, 8:30 Central. I'm going to be talking about everything that's going on in the U.S. markets. We'll set the rest of the table up for you today before this long weekend. Join me. We're going to be talking about some really cool stuff that's going on in the markets. We'll see you then.